6 Best Investments for Beginners. Beginners might be eager to dangle their toes in the waters of investing given that the stock market and apparently every other asset class are seeing growth. You don't want a nasty surprise after you've invested because some investments are riskier than others. Consider your ability to go without the funds you will be investing and whether you can go a few years or longer without having access to them. Here are some of the best investment suggestions for newcomers. 1. High-yield savings accounts. One of the simplest methods to increase your return on investment over that of a typical checking account is to do this. High-yield savings accounts, which are frequently opened through an online bank, typically offer consumers regular access to their funds while paying an average interest rate that is higher than normal savings accounts. This can be a wonderful spot to stash money you're keeping in case of an emergency or saving for a purchase you want to make in the next few years. 2. Certificates of deposit, CDs. An alternative to high-yield savings accounts is a certificate of deposit, CD, but this will tie up your money for a longer period of time. You can buy a CD for as little as 6 months or as long as 5 years, but normally you can't access the money before the CD matures without incurring fees. They are thought to be very secure, and if you buy one from a bank that is federally insured, you're covered up to $250,000 per depositor, per ownership type. 3. 401k or another workplace retirement plan. This may be among the simplest methods to begin investing, and it comes with some significant benefits that may help you both now and in the future. The majority of employers offer to match a percentage of the amount you decide to set aside from your regular paycheck for retirement. You are passing up free money if your employer offers a match and you don't take advantage of the opportunity. Because they are automatic once you've made your initial selections and enable you to continuously contribute over time, these workplace retirement plans are excellent instruments for saving money. 4. Mutual funds. Investors who may not be able to readily put together a portfolio of stocks, bonds, or other assets on their own have the opportunity to do so through mutual funds. The most well-liked mutual funds follow indexes like the S&P 500, which includes about 500 of the biggest U.S. corporations. 5. ETFs. While exchange-traded funds, or ETFs, fluctuate throughout the day like stocks do, they differ from mutual funds in that they own a basket of securities. The minimum investment for ETFs is lower than that of mutual funds, which is normally a few $1,000s. ETFs can be bought for the price of one share plus any applicable fees or commissions, though you can start off with much less if your broker supports fractional share trading. 6. Individual stocks. The riskiest investment strategy we've examined here is purchasing individual company stocks, but it may also be one of the most lucrative. However, you should think about whether purchasing a stock makes sense for you before you start making trades. Ask yourself if you understand the business you are investing in and if you are investing for the long term, which is typically defined as at least 5 years. Instead, think about using the more diversified method provided by mutual funds or exchange-traded funds, ETFs, if you don't feel you have the knowledge or stamina to ride it out with individual stocks.